Welcome to Risk and Return, the channel that simplifies finance and investing, empowering you to make informed financial choices. In this video, we will explore how to invest wisely in 2025. We'll discuss what's changed, what's remained stable, and how to optimize your investments in this evolving financial environment. Whether you are starting your investment journey or managing an existing portfolio, this guide will illuminate potential opportunities and challenges ahead. Let's dive in. Before we outline specific strategies, it's crucial to grasp the current market landscape. 2025 is set to be a pivotal year. Following several years of fluctuations due to inflation, rising interest rates, geopolitical uncertainties, and the advent of artificial intelligence, market conditions are beginning to stabilize, but there's still a sense of caution. Currently, the Fed has halted interest rate increases, inflation is easing but persists, and global economies are recalibrating. For investors, this indicates that the effortless profits of prior years may no longer exist. The focus now shifts towards smart allocation, diversification, and long-term investment strategies. Enduring investment principles. Let's revisit essential investment fundamentals. Regardless of the year, wise investing hinges on several core tenets. Begin early and maintain consistency. Time spent in the market outweighs attempts to predict market timing. Diversify your investments. Avoid consolidating all your assets into a single investment. Understand your risk tolerance. Are you planning to invest for 5 years, 10 years, or for retirement? Refrain from emotional decision-making. Fear and greed can undermine smart investing. Prioritize long-term investments. Wealth creation occurs over many years, not in short bursts. These principles will keep you grounded, no matter the market conditions. Where should you allocate your funds in 2025? Here are 5 critical investment areas to consider. 1. U.S. stocks. Approach with care. While the S&P 500 remains a solid benchmark, not all sectors hold equal promise right now. In 2025, growth opportunities are predominantly in AI and automation. Companies engaged in AI technologies are experiencing significant growth. Green energy, investments in solar, wind, and energy storage are rising as the world aims for decarbonization. Healthcare and biotech. Given aging populations and emerging technologies, this sector is poised for expansion. Defense and cybersecurity. Geopolitical uncertainty elevates the significance of this sector across the globe. Utilizing ETFs such as QQQ, VU, or sector-specific funds can provide exposure without the risks of choosing individual stocks. 2. International markets. Focus on emerging economies. In 2025, nations like India, Vietnam, and certain regions in Latin America are experiencing unexpectedly strong growth. While China remains relevant, its future is less certain. Consider investing in ETFs like VWO, emerging markets, or EFA, developed markets outside the US. 3. Bonds. A resurgence. Bonds are regaining their appeal after several years. With rising yields and potential price increases as interest rates stabilize, options include U.S. Treasuries, municipal bonds, with tax benefits, corporate bonds, higher yields but with added risk. Short or intermediate-term bond ETFs, such as BND, AGG, or TLT, are also viable options. 4. Real estate. Identifying strategic opportunities. Elevated mortgage rates. Many real estate markets have softened. This could present opportunities. Investigate. REITs, real estate investment trusts. For passive income crowdfunded real estate platforms. Local prospects. If you're prepared to invest in property, always conduct thorough research. Factors like location, interest rates, and rental demand are vital. 5. Alternative investments. Exercise caution. Cryptocurrency, Bitcoin and Ethereum are regaining interest, but remain cautious. Precious metals, gold and silver stand as safe haven assets, especially during uncertain times. Private equity or startups. These options carry high risks and rewards. They are suitable only for seasoned investors willing to risk their capital. In addition to identifying where to invest, consider implementing these strategies to enhance your investment outcomes this year. 1. Dollar cost averaging. Investing fixed amounts regularly, regardless of market fluctuations, lowers the risk of entering at a peak. This strategy helps maintain consistency and allows for wealth accumulation over time. 2. Portfolio rebalancing. Evaluate your asset allocation every 6 to 12 months. If your stocks have exceeded their intended proportion, adjust by trimming and redistributing your investments. 3. Take advantage of tax-advantaged accounts. In 2025, fully utilize contributions to your Roth IRA, traditional IRA, and 401k. These accounts provide substantial tax advantages integral to any long-term strategy. 4. Dividend investing for consistent income. Stocks and ETFs that pay dividends deliver regular income, and many companies increase their payouts over time. This can effectively generate passive cash flow. 5. Keep learning. Successful investors embrace continuous education. Read literature, follow credible sources, and tune into channels like Risk and Return for ongoing insights and analysis. Avoidable mistakes in 2025. Even seasoned investors may stumble. Here are several pitfalls to avoid. Chasing fleeting trends. Just because an asset is rising does not guarantee its future performance. Overlooking fees. Expense ratios and trading costs can significantly diminish your returns. Aimlessly attempting to time the market. No one can accurately predict market peaks or troughs. Letting emotions govern decisions. Emotional reactions, such as panic selling or impulsive buying, often result in regret. Overcommitting to a single concept. Remarkable companies can falter. Maintain diversification. If you are new to investing, here are some tools to facilitate your journey. Brokerages like Fidelity, Vanguard, Schwab, and Robinhood offer accessible, low-cost investing platforms. User-friendly apps such as Public, M1 Finance, and Webull cater to beginners. For tracking your portfolio, consider Morningstar, Personal Capital, or Google Sheets to monitor your investments. For research, explore Yahoo Finance. Seeking Alpha Finviz Company 10K filings for in-depth analysis. Investing in 2025 doesn't require prophetic abilities. It necessitates a well-defined strategy. Uncertainties will always be present, yet disciplined investors who comprehend the landscape, evade significant errors, and invest with a long-term focus are the ones who ultimately succeed. Begin modestly. Maintain consistency. Continuously educate yourself. Most importantly, concentrate on your objectives, not the surrounding noise. If you found this video enlightening, please like, subscribe, and share it with anyone seeking smarter investment tactics this year. Thank you for watching Risk and Return. Remember to subscribe, and we'll see you in our next video.